All right. Good morning, everyone, and welcome to Brexit Thursday. Today is Thursday, the 23rd of June. Michael Boutros here with you guys. Welcome to this live intraday strategy webinar on SB Trade Desk. It's a big day. Good to have everyone here with us. Adam, Francis, Premendra, love the enthusiasm. Eileen, as always, pleasure to see you. Um, Mario, Mir, Pooja, we got the whole team in today. So, the day is upon us, okay? Voting should start to trickle in. We might get as early as late this afternoon. The initial results starting to trickle in from the vote. We're getting some headlines crossing. Merkel recently has voted for some sort of unified EU response to whatever the vote comes out from the UK. But certainly, nothing's going to clear out until the dust settles on this type of event, guys. So we'll go over all the sterling crosses. We'll go over the dollar crosses as well that we've been following. Got some interesting moves here. Euro near resistance. Sterling near a near-term Fibonacci resistance off the lows. We'll talk about some of the other sterling crosses that we're looking at. Sterling key still holding its opening range, so a break there should be pretty clear. Aussie dollar rallied near resistance overnight. Euro CAD. There's a lot to talk about. So keep your questions coming, guys. If you have any specifics on how to trade this event, or if you're not going to trade this event, or if you have a position that you're looking to take on, or any pairs that you want to review, please feel free to post it on the message board. I'm going to try to get through all these here for a good preview. Before we get started, relative performance so far heading into the U.S. Open, the dollar is lower against most of its major counterparts. You can see that the pound is the biggest rallier in overnight trade, up 1.24%. You got almost a 0.9% gain on Euro, Aussie, and Kiwi. CAD up 0.83. Swissy with a negligible 0.28. Yen, dramatic drop off on the yen with a decline for dollar yen. Or a rally rather for dollar yen, decline in the yen of 1.33%. If we bring this into the base currency for the pound, just to see what the relative performance for the pound looks like, you can see that sterling is higher across all its major counterparts. Okay, this is a tell, guys, of what the market expectations are heading into the release. We can also take a look at give me one moment. We can also take a look at the broader equity markets, and you can see this is the close for the Americas, obviously, yesterday, but you can see Europe is higher across the board. FTSE 100 up 1.12%, CAC 40 up 1.68. You got the DAX, the big juggernaut, up 1.66 on the session. So as it stands right now, there is some sort of consensus expectation that we will see the Brexit vote to stay. Now, as a caveat, I just want to put this out there as we go through this today. You'll be getting regular updates from both myself and Jamie through the release. We're going to be up all night going through that, so definitely keep your eye on SB Squawk. The one thing I want to note is this, guys. The polls are likely to come in lopsided, meaning there are some districts that are going to be heavily weighted toward Brexit, and there are going to be some districts that are heavily weighted towards the stay camp. Now, as we go through and we get these trickling through, these results, you might get the first couple of districts that are heavily weighted for a Brexit start to come in first. Markets will react to that. Then as we go through the other various districts for the stay camp, it'll tend to level off that vote. So it's not all said and done until we get the final vote, guys, and I want to keep that very, very clear as you get through the night. We probably won't get the final results till about 2 a.m. here in New York, maybe even later. So I just want to make sure that if the first couple of districts report for a Brexit or for a leave, we don't want to make a broader reaction just on those first initial incoming data points. We want to make sure we keep in mind that there's going to be districts specifically that are extremely heavy on the Brexit and those that are extremely heavy on the stay camp. So keep that in mind as you go through the next 24 hours. All right, let's jump right into price action. So first things first, I do want to cover, obviously, the British pound and where that's trading. These are the same levels that we've been looking at all week. The only new level here is the level that we just ran into in overnight trade. That's 149.45. The overnight high was actually 149.46, literally like right there. This constitutes an equal 100% extension, so two equal legs up from the low. The level that we were also watching as a subsequent move was this pivot right here at 49.75. Which is the May 18th close. And if you remember, that day was a massive outside reversal day, the close of which has offered some pretty clean pivots in price. So that's just higher. Major key structural resistance at this point on a topside break is up here. Okay, that's a 1618 extension just from the initial ascent off that low, and a broader key 618 retracement of the entire decline off of the June highs from last year. Levels are pretty clear. Near-term support, I'd still be looking for a possible near-term support along that trend line. That takes you somewhere around 47.90. Basically, let's call it 48. And then obviously the yearly open is going to be the critical level that we want to stay on top if this is to stay constructive. Heading into the release, the more volatile pair will be sterling yen, which we'll go over in a moment, but sort of possibilities for how this could play out. Interestingly enough, if we take a retracement, and this is still, obviously we don't know that this is a concerted high here, but let's just say for argument's sake that does hold into the release. Interestingly enough, if you take a retracement just of the advance, look where that 618 comes in. Right at 43.68. Look where the close for Friday, the uncovered gap, would require a move into 43.45. So you have sort of like a 20 pip zone here, which coincides on the former upper median line if we get a spillover. Okay? This is not a trade recommendation, but if you put a gun to my head, how I'd expect this to play out, if the camp votes to stay, I do think you get a possible initial rally, but then this thing turns over pretty hard. Why? Because the markets are pricing that in as we speak, guys. This rally that we've been seeing, and I'm sure you've been seeing all over the headlines, sterling's up 6% already. We're already up into fresh yearly highs. All this talk about the strength that we're seeing in the pound, it's unlikely that you'll get this thing coming out for a stay, and then all of a sudden it takes another 3% rally, right? So I do think if we get a stay vote, you do get a little bit more strength. You want to be cautious heading into this 49.75, 49.45 region. And if this thing starts to spill over, you want to look for initial support along that 200-day moving average. Okay, 46.71, which was the 2015 low day close. Okay, if I bring this back to the 2015 low day close, right here. And then a break there would suggest that you're going to see a spill to fill that gap. And again, that key support and that 618 that we drew would sort of be the initial downside targets. It's not going to be an easy event to trade. I don't want to encourage anyone here, if you're a little bit newer to the near-term trading strategy, or if this is your first major event risk, it's not something that you want to dabble with. This is going to be a little bit more of a tricky setup here because, again, we're going to be getting those data points trickling in. It's not going to be like NFPs, beat or miss, non-farm payroll, beat or miss, right? It's going to be, okay, this district is reporting votes are X. This district is reporting votes are Y. So we want to make sure that we're sort of pacing ourselves on the move. Here's what it looks like on the 30-minute. Okay. Now, again, you're not making higher highs in momentum by any magnitude. In fact, on those last two highs that you made, you got some divergence continuing to build. As we head into these major event risks, guys, you do want to rely less on any type of oscillators. Price action will tend to move a lot faster than the oscillator will peg. Remember, any oscillator you look at only pegs. That line only sticks to that point once the candle is closed. So if we get a 5-minute or even a 10 or a 30-minute candle that we're looking at, and price spikes all over the place, momentum is not going to tell you anything. Okay, so less reliance on this, and more reliance on just price point movement. That's it. We're just watching price. Adam says, will you be trading, Michael? Jamie said he plans to. Sure. I mean, for me, yeah, definitely. I do this all the time, Adam. So for me, yeah, we'll be looking for opportunities. I kind of like trading sterling yen. Again, a much more volatile pair, not for the light of heart. But for someone like me who's been trading near term for, almost 10 years now, this is sort of where we can try to make some really nice moves on near term price action. So if we get a stay and this thing spikes up into key resistance, like we just noted here on the daily chart, that might be a beautiful opportunity to fade it. If they decide to leave, okay, that's going to be the harder trade to make because the spill is likely to be so fast that It's going to be difficult to get in the market. Adam, one thing I do, he says, and make some great profits! Exclamation point. Cheers, God willing. Hopefully, man, we'll see. But Adam, one thing I want to point out to everyone here in the room is, all the brokerages are expecting that we could see spreads completely blow out. I don't know if you guys were watching last night ahead of the Asia Open. Spreads on the sterling dollar went above 8 pips, which is kind of big, right? So that's nothing. Believe me, sitting on the desk, I've seen these spreads widen out way more than that on major event risks. And certainly this is a precedent. So if we do get a Brexit vote, you could see that spread pop out 50 pips, okay? Good luck on your stops, good luck on your limits in such a scenario. So just make sure we're recognizing the risk that we're heading into. That being said, yeah, Adam, it's going to be really determined on how this all pans out, and where price action's trading. Like I said yesterday, guys, the way you want to play this is based on where price is trading as we get the data, okay? If price is at resistance and all of a sudden we're pressing and knocking on the door on 49.50 again, 49.45 here, and we get a stay vote, there's not really much for me to do. Because if it spikes higher, I'm not going to chase it higher at resistance, even if it breaks. We still have to respect a risk to reward ratio, right? We're never going to chase these trades, even on event risk. A chaser is just not a strategy that I'm going to ever really advocate for. So I'd love to see sort of a spike higher if we can get closer to that. If we get into 51, like I said, that would be a nice region, basic trendline resistance or channel resistance for the current slope we've been working with. Obviously, you have the 1618 and that key 618, major confluence here. Or, Adam, and don't put it outside the realm of possibility on a day like today, if price spills all the way back into the gap close for Friday, an opportunity which I'd like to get long. Okay, despite what happens with the Brexit vote. If we get a move into this region and all of a sudden price starts leveling out, I'd look for a low to rally off of and then another test of a low to give me a stop against the initial low that we made, looking for a pushback higher. So this is the pound. And again, I'll tweet this chart throughout the course of the day, guys, as we get moving through these levels. So if there are any other questions on pound dollar specifically, feel free to post them on the message board now. Mirror, Euro pound may be the pair to trade long after the dust settles down. The Brexit may provide good entry level. Mirror, I agree with you on that. Let me write that down. We'll definitely take a look at Euro pound. That's something I have been following, and definitely something that'll be interesting on a day like today. Although you might not get too much of a play if the vote ends up being a dud and we don't get much. Did you mention what will happen if it's a leave vote? So yeah, Horace, like I was saying, if it's a leave vote, man, that's going to be the real market turmoil. Not just because of all the things that we've been talking about for the last few months, because of the implications for the Euro project, because of what the decoupling will look like, the possible impact on trade deals within the European region, all that good stuff. Aside from that, Horace, if they leave, okay, the markets are pricing in a stay. That's why it's a concern. If markets were pricing in a leave and they ended up voting a leave, you might not get that much volatility. But because markets have sort of been discounting the fact that we're going to see a leave vote, that's why the leave vote, if it does materialize, will be the much more severe outcome, or the more detrimental outcome, let's call it. In such a scenario, Horace, like I said, I really wouldn't be looking to chase the downside. You're likely to see gaps blow out 20, 30 pips. I'd be looking to fill the gap and for possible entry for a rebound off of that gap fill. I don't buy this. Let me just take a step back. I don't subscribe to this notion that if we do see a Brexit, the sterling is going to drop 20, 30%. I don't subscribe to that. It could very well happen, but that's just not my personal opinion. I do think that you see a pretty severe drop. We've made a massive rally already just this week alone, and to fill the gap would need a 500 pip drop into 43.60. So, that would be an area I'd start to look for some support, Horace, on a leave vote. So I really don't think I would be looking to play this short unless Again, one possible scenario, Horace, is if they do choose to leave, you got to think about, guys, how markets are positioned. Let me do this. If we take a look at SSI, which is, of course, a proprietary read from FXCM, which is basically gauging market positioning, right? Where their clients, and again, FXCM being one of the largest brokerages for foreign currencies on the retail scale, gives us a really good sample size of what retail clients are positioned at. And you can see that we recently turned on the open of the week to net negative again. So clients are stacked up on this trade on the short side. So it's very conceivable, okay, where you would see a situation where they do decide to leave, and all the guys who have been holding longs from this position start to get out of that position, perpetuates a drop very, very sharp. The market is already positioned on the short side, okay? And as the market moves off, these guys closing and squaring of the positions might give us a really strong rebound back to the upside. You got to think about the move that's going to catch as many people on the wrong foot as possible. And with the pound being sterling, a professionally traded market, really well known to fake out. I tell you this, guys, all the time, known for the throw over, the breach of resistance and a pullback, known for the breakdown below support and the pullback. Think of the move that's going to catch as many people off guard. And the markets are positioned, or at least retail, on the short side of this trade. If you guys read yesterday's swing update, I put a link in the intraday update. I think Jamie covered it perfectly. I didn't even need to add anything to it. Keep in mind that there are hedge funds that have private exit polls. They'll be monitoring those polls very closely. Me and Jamie will be lending a keen ear to some of the resources that we have. If we get any information on that, we'll pass it over to you guys over on SB Squawk. But largely, guys, these polls are going to be unknown to the markets. Okay, these hedge funds and larger institutions have the money to dish out for the manpower and resources to run these exit polls. So before the government starts reporting, before the districts start coming out with their votes, some of these other hedge funds, like I said, and larger institutions will already have a kind of an idea of where the vote is leaning. So the markets could start reacting before we actually get the prints, and keep that in mind. But Horace, does that make sense? He says, got it. Right on, man. Good question, and I hope that offers some clearance, or clarity rather, on this trade here for the pound. It's going to be a volatile day. Just expect that, okay? Largely speaking, I would love to see sort of a rally if we break on a stay vote back to this region, in which I'd start to look for short exposure. On a move to the downside, on a detrimental break below this region, again, that 2015 low day close, the 200-day moving average, a break below this, I'd be looking for possible support at the gap from Friday, former median line resistance, and again, that might be an entry for a possible long exposure. With the results coming in over hours, could there be a lot of chop on every report, especially if it closes? If it's close, I'm sorry, Mark. Absolutely. You kind of just summed up what I said right there, Mark. Absolutely. As each district comes through, you might not have been here for the first part of the webinar, Mark, but we talked about that. As each district reports, there's going to be some districts that are heavily weighted towards leave and some heavily weighted towards stay. And the reporting is likely to be lopsided, meaning I've read some reports saying that the first initial incoming districts are likely to vote or be leaning heavily towards the leave camp. Now, that doesn't mean that the broader vote is going to be as such, but something definitely that you want to keep in mind as we get those reports trickling in. All right. That's the British pound. Let's jump into pound yen, which is one that we highlighted last night on the intraday update. And then we'll jump into the euro dollar. So here's what pound yen looked like last night. We've already made a move here, breaching that key near-term resistance that I highlighted at 156.17, 156.73. The major area now you're looking at is this median line here, the upper median line parallel that we're looking at on this daily chart, which we kind of probed right through and checked that swing high that we made for the 7th of the month. Okay, it's basically what we're looking at, resistance near term. Momentum has already made a nice clear rebound back above that 50 level. Here's the 30 minute, looks like. can hardly contain my excitement, guys. Here's what it looks like from yesterday, and here's what it looks like from today. So honestly, guys, not much of an opportunity unless you were here sort of awake into this dip into the European Open. This was actually a really good opportunity to get back on the long side. Why? Because your stop would have been right along the US lows. So really tight stop. Keep in mind, a quarter of the daily ATR here is still 69 pips. Huge range. Okay, and this is likely to get even more. Graham, thank you for that. Good point. And he says not only districts with different, sentiment, but also districts with different sizes. Absolutely. So there's more districts that are going to be more representative of the broader populace. There are districts that are smaller that are going to have their own little, opinions on whether they should go or leave. But you're absolutely point. So just the 400 pip move on sterling yen since London opened. Exactly. You're seeing the kind of volatility now start to rear its head. But the levels we've mapped out are pretty darn clear, in my opinion. So here's that first key level of resistance I was looking for. You also had a trend line just off the low there, a basic trend line converging on that. We popped right above it, okay? And 158.02 was almost the exact high here. 158.07, overshot it by 4 pips. And that's just a decent, real clear pivot in price here. So we checked last week's, or this is a few weeks ago, the high. You got median line resistance, near term. Look for this possibly to give some kickback. Momentum unable to make it through 70. Again, likely to see a lot of chop here until we start getting some of those results trickling in. But on a trade like this, again, near-term support of magnitude at this point for me would be right back here at the May low day close, the 50% retracement, and a break higher. You're looking for 159.80, 161.64. I do like a pound yen rally, broadly speaking. Does it rally through from here? It's going to be the same setup that we're talking about with the sterling dollar, except likely to be a lot more significant. Okay, because we've already seen that the yen losses are the biggest loser on the session ahead of this, and the yen is likely to adjust and likely to price this in a lot more aggressively. Remember, if there's a Brexit, there's likely to be a lot of pressure on the BOJ to have to do more, okay? And that's going to be yen weakness. If they decide to stay, well, that's not going to necessarily hit the yen as much, but I do think that pound strength could carry this through. And, I'd be looking to see if we can see a breach of this near-term major key resistance level here at the confluence of that upper median line parallel. Any questions on pound yen? Again, not for the faint of heart. 274 pip daily ATR. She's a big one, okay? Likely to see some real serious volatility on this pair as we get through the release. Okay, that is pound yen. Let's jump into the euro dollar. So let me take a step back here, guys, before we go any further. For those of you looking to kind of dabble with this release and how to trade it, the pairs I recommend to you, if this is kind of new to you, or again, you want to stay a little bit more, you don't want to get involved with the big boys like the pound yen, euro dollar and pound dollar are probably going to be the ones that you want to focus on. There's going to be some opportunities, I personally think, in some of the dollar crosses that are not sterling denominated, and we'll go over those, specifically Aussie here at resistance. But before we do, here's what euro looks like. On the daily chart, okay, and here's what we looked like last night on the 30-minute chart. I'll go over this in a moment. So for the daily chart, guys, if you recall the previous update from earlier in the week on the 20th, here's what the daily chart looked like, okay? And we were saying, look, we're constructive above this key region right here. Now, the bullish invalidation level is way down, basically at 1128, which is the monthly open. It's the low we made last week. You have some median line support there. So, a break there would sort of invalidate the broader upside bias. But we're constructive above the median line, which was dead on with that 100-day moving average at 112.30, 112.32. Well, early in the week, you got that gap fill. It moved right into that key support. It held. Next major key resistance, we just tapped on the door earlier today. The high came in at 114.20, the 618, 114.17. So Euro's playing this thing like a fiddle right through these levels, exceptionally clean. I do want to highlight 114.42, which is also a level of significance. That's the May 2015 high day close. Also been a decent pivot in price as well. So that's going to be a level that converges on the median line off the lows and the upper median line parallel for the current embedded descending structure. Okay, so Euro has been exceptionally clean as far as playing through our levels. You're looking to stay constructive even on this rally here. From here, I definitely wouldn't be looking for any long exposure at this point. The long bias is at risk while below this, so same type of deal. I'd be looking for a pullback to offer an opportunity to get long. Remember, we talked about this yesterday. The pair has filled the gap, reversed, and taken out the opening range high. Opening range reversal on this keeps me, at least on the broader view, looking higher. Here's what it looks like on the 30-minute. And here's what we looked like last night. Okay, so 1346 was near-term resistance. We sat there basically into the open of European trade, finally got that break, and rallied right into the highs, 1381. And then again, that 618 retracement at 114.17 kind of capped it just now. There's that major resistance level on 114.40 here, where the upper median line parallel, that converges on the daily chart level that we just looked at. May high day close. So really clean. And this is the one I'm going to be most focused on, to be honest with you guys. This and pound yen for me are kind of what I'm going to be looking to play with as we get more clarity. Now that we've broken these highs, I kind of wanted to wait for the webinar to do this, guys, with you. So we're going to get rid of this retracement now. That's null and void. The high has been taken out. We filled the gap, made a round trip, broke the highs. Going to keep the bullish invalidation level near term constructive above the lower parallels here in red. So you could see a spill right into this level as low as 112, as low as 1170s, 1180s, of which, again, I'd start to look for some major support here in the euro for some possible long exposure. Now, if they leave, that's on a stay type of play. I do think it moves higher. You possibly see a recovery lower, fake everyone out, and then you look to reinitiate on the long side. But if they leave, you'd wait for a break below the median line, guys, and that's when you need to see a rebound back into it to take a short position. I'm really not going to try to press the short on this unless we're kind of higher near that 1440 level. And it's likely to be fast. If you have time to do it and the spreads aren't completely crazy, that might be a decent play on a leave vote if we're trading around these levels. But it's likely to be pretty quick. So on a leave vote, if it does plummet, look for a pullback and a retest of this as resistance to try to press back on the short side. But broadly speaking, all things held constant from a technical standpoint, trade still remains pretty constructive. I'd be looking for a possible stretch and move lower from here, but inevitably I'd be looking to take that high or take that low for a long position. Any questions on the euro? There's some interesting euro crosses we'll go over as well. But euro dollar, that's sort of the game plan I've been working with. And again, those key levels on the daily charts, kind of all you need to really focus on moving forward. Eileen says, can you show an example with drill downs of how you will watch for an entry as you plan trading today? Euro-dollar, for example, will you just watch price or major areas or 5-minute and RSI like normal? Yeah, so Eileen, I won't necessarily be watching RSI in a 5-minute level with too much with too much emphasis, I want to say. Okay? It's going to be on my chart. It's what I look at. You guys know how my live account looks. Let me bring it up for you. I'm not even logged in on this computer, so let me do that real quick. And again, I don't necessarily want to stress you guys looking at a 5 and 1 minute chart during this either, because it's gonna just go nuts. But we'll be looking for the same type of stuff, guys. I don't want to stress the oscillators. Again, by the time this pegs, we're likely to see a 30, 40 pip move. That's how volatile this could get tonight. Um, as a disclaimer, I keep just moving back a sec. Um, Very possible, guys, that we get a vote to stay and this thing's a complete dud. Nothing happens. Like I said, markets have been pricing in a stay vote. If it comes out as such, you might not even get much volatility. That being said, as just a preface there, um, I'll be just watching price action, and this is exactly how I'll be trading. I'll have my um, 5 minute, 1 minute charts sort of set on the side, and then I'll have my 30-minute chart mapping my levels. So I'm keeping track of what the level is I'm looking for next. I'm looking to see what near-term price action is doing, and we'll react from there. A lot of it's going to be based on the data that's coming in. So, Eileen, this is where the fundamentals are going to be the triggers. I really don't care what the outcome is. I just need to know when it's being released, because price action will tell me what they're saying, right? So don't stress the oscillators too much. She says makes sense. All right, Eileen. And again, we'll be online, so we'll try to keep you updated as things move, as they're likely to move pretty darn fast. All right, let's jump through the pairs. We're running a little low on time here. We got a lot to get through. So that's the euro dollar, euro dollar, dollar, and pound yen. Sort of the big players for today. I do want to take a moment and talk about the Aussie dollar, because another one that's very clean. We've been following this one as well over on the intraday charts. So we're coming into a major area of near-term resistance. I think this was highlighted, if I'm not mistaken. Right here on the 20th. And here's what we're looking at with the daily chart. Oh, that's the scale chart. Here's the daily chart. Okay, we opened the week, we gapped higher. Major key resistance confluence was way up here. Okay, we never actually filled the gap. That momentum trigger that we were looking at held, and a breach above what is that, 74.90 really cleared the way for that advance into key resistance. But that's what we're testing right now. Momentum testing 60 as resistance as well. Here's what it looked like on the scalp earlier in the week. Here's what it looks like on the scalp now. Okay, so we're looking to stay constructive above the 74 handle. We never even made a run at it. It stayed as such. We're still within the confines of this median line formation, offering some pretty nice pivots. And again, those topside targets all taken out right into 75.90, which, by the way, is defined by the April low day close. And you can see that more clearly here on the daily chart right here. April 2015 low day close. Huge pivot in price, right? And it coincides with the upper median line parallel, the current median line off the low, and the 618 is just lower at 75.70. So near term, this thing's knocking on the door in resistance, okay? If you're holding long exposure still on that break, this is an area definitely where I'd be looking to reduce position size, bring your stops to break even or better. On a topside break, I mean, there's really not much on tap until this long-dated basic trendline resistance that dates all the way back to the low we made in 2013, specifically August. We tapped it again in January of 2014. We broke through it late that year, tapped it as resistance in 2015 twice. And now again, we failed here again this year. And that's your next target on the upside if we do breach. Currently comes in somewhere around the 77 handle. And if you add a basic if we put this on a 78.6, there it is. 76.86, right around that 77 handle would be your next topside objective. Key support at this point, interestingly enough, again, I know this chart's getting kind of full here, but interestingly enough, where does the gap come in? Right along basic trendline support off the lows. So if we do see this thing completely tank, or if the dollar rallies on a Brexit stay, for example, which a lot of people are saying could happen, I particularly don't think that the dollar will rally too much on a Brexit stay. Remember, we've been pricing in on a stay. A lot of people are saying that if they do decide to stay, that eases pressures on the Fed, which means that they could hike rates sooner. I don't think you can really translate it like that. By the way, if we take a quick look at Fed Fund futures, I just want to point out that we have seen a small uptick now in the expectation. So remember, we were looking at this yesterday. The first material expectation was past February of 2017. Now it's brought up back to December. So interest rate expectations are starting to uptick higher, and I truly believe that that's a function of the market starting to price in a stay vote. Okay, so we'll be watching this very closely, and if we do see this start to surge higher, that could fuel the dollar with a little bit more support, which could give this thing a move to the downside off this key resistance. But long story short, heading into the release, heading to the close of the week, long exposure is at risk while below this region. Okay, so keep that in focus, keep that in mind. I still like the long side of the Aussie, but here, longs are at risk from this region. And I also just want to check this. Give me one sec. Okay. Actually, yeah, I'm going to use this extension because if you take a look, the 618 caught that high even more so with some clarity than that 50. So we'll go ahead and get rid of that 50 retracement here. And we don't need this anymore here. All right, so keep or feel free to take a snapshot of this, guys, if you need it for future reference as we get through the session today, watching that major key resistance near term. Okay, we are making some progress here. Okay, moving right along. Next up on tap, I have Kiwi CAD, which we also highlighted last night. I actually put this setup also on Daily FX. I think it was an interesting play here. Not necessarily something that we want to get involved in right now, I think, but certainly looking at some major key resistance near term that we're coming into from a Fibonacci standpoint. So here's what the daily chart looked like yesterday. We're probing this region again today. Here's what Kiwi CAD looks like presently. Okay, and this region is basically defined by some major key levels. Okay, you have a huge confluence here, and you know I love these confluences. A 1618 extension off the low converges on a key 618 retracement off the high. That's right at the 92 handle, 9204 into 9207. Just higher, you have that 9225 level. Okay, which is basically that stretch high that you made here. Has been a decent pivot in price over the last few months, and is also I'm sorry. So yeah, it's that stretch high from the February 24th level. Gives us a little cushion here. We've been looking at that key range for quite some time. The rally's still at risk, in my opinion, while below this region. Okay, the trade remains constructive while above last year's open at 90.43 here. Coincides very nicely with a median line off the lows from March. So this is your bullish invalidation level. That would also, by the way, necessitate a break of the weekly opening range. So it gives us even more conviction on keeping this sort of the last-ditch support effort we want to see. But near term, heading into this region, you're looking a little bit vulnerable on the long side. Here's what Kiwi CAD looks like on the 30-minute. Boom. All right, and here's what we looked like last night. So there's really not much to do. There wasn't much to do on this last night. You got one more rally back towards this region, which we're testing now as resistance. You're marking divergence into these highs on a 3 set of divergence here. So use some caution. I do think it still risks turning over. But, and that's a big capital "but" and a capital "it," you have the Kiwi dollar, which looks like it actually may have broken out. I'm not going to touch this at this point, but here's what Kiwi looks like. This was huge. Okay, it was 618 retracement off the high. You had the 2011 low day close. You had basic parallel resistance. You had another channel resistance for the broader one. We've been off from last year's low, and we're breaking all of them. Okay, we're breaking through all of them. So initial targets, you have a soft target at 72.80. And the next big region of resistance isn't up until 73.80 into 73.14 up in this region, where you have a pair of confluence fib levels that could offer some resistance. This is my only problem with playing Kiwi CAD too aggressively, is if this breakout is legit, I don't want to try to fade Kiwi CAD. Okay, because this thing has been trying to coil up for a break for quite some time. We've been breaking some downslope resistance over the last few months, and that's a clear tell, especially when they're month-long downslope resistance levels that you're breaking. It's typically suggestive that you're seeing some sort of near-term turn in price. Bottom line, I'm looking to see the close here today, guys. If we close back below 71.75, I do think that this thing risks a spill right back into key support at 69.70, the 70 handle. If we close above it, continue to look for that rally to press 72.80 and up into 73.78, 73.14. Here's what Kiwi looks like on the 30-minute chart. Big, big region that we just pushed through. And this retracement now is null and void. All right. Any questions on Kiwi dollar? Or excuse me, on Kiwi dollar here, or Kiwi CAD for that matter. Okay, I want to jump into that question on Euro Pound because definitely will be a relevant trade as we head into the session here today. Here's what Euro Pound looks like on the daily chart. We're still struggling around that key support level. I'm not really too comfortable calling this a break just yet. This is the lower parallel for the current operative slope we've been following from last year's low. You also have a basic 786 retracement, which we've been unable to close below. We tagged it twice over the last 2 days, but no close. A probe here today is back above it now. And also former channel resistance. So there's a whole debacle of things here for Euro Pound. If we see a Brexit vote, if they do decide to Brexit, I think the initial reaction is going to be further pound strength, further pound weakness rather than Euro weakness, or rather, to put it more in an easier way to understand, Euro weakness should pound weakness, should outpace Euro weakness at first, but I don't think that lasts. I think you do see a pretty strong move to the upside on a Brexit vote, and then it starts to fade again. Because the implications, I think, for the broader Eurozone are a little bit more concerning, let's say, than necessarily just for the UK. So definitely, watch what the result is. And on a Brexit vote, like I said, I would expect to see sterling losses to outpace that of the euro, which could give this some upside. But inevitably, I think you look to possibly fade that again. I don't have a really clear near-term picture on Euro Pound. I know we put this together in the webinar a couple of weeks ago. Was this yesterday? No, this was... Oh, yeah, I think it might have been yesterday. Let's take this to the new low. It brings that resistance. Yeah, this is one that we put together yesterday here in the webinar. There's near-term resistance. Just snap these levels real quick. Okay. Immediate support on the downside stretch. You got an 88.6 here, comes in at 76.12, also along that lower median line parallel. And one more extension I want to look at real quick, just bear with me, is the broader view. I guess we can do this on the daily chart, it might be easier. Interesting. Okay, see where that 618 extension, guys, lines up? It comes right on that 786 that we're currently looking at. Okay. All right, so something to keep in mind right here. This is also a key 618 retrace extension, off the highs. So adding further validation to the 7650 zone being something critical, specifically on a closed basis to validate the break out of this formation. But also gives us a little bit more pause that we could see a nice rebound off this level. Long story short, the 100% extension off that initial decline is dead in line with the 200 day moving average here also today. So you have really clear-cut levels as far as what your targets would be. And to fill the gap, we would need to rally back up into this region right here, 78.47. And that's going to be your near-term resistance right up here. Mir, does that help for euro pound? He says, long after the dust settles down, the Brexit may provide a good entry level. I agree. Yeah, it's going to be something that's much trickier to trade as the results are coming out because it's euro and pound. Okay, and they're both going to be reacting to this data for sure. But I do think once the dust settles and we get a close today, yeah, I think it's going to be very interesting to see if you hold above that 76.50 region. If not, next 100 pip drop takes you in 75.16. That's a really nice confluence as well. 200-day moving average in line with that 100% extension, 2 equal legs down. Mir says, yes, thanks. All right, you're more than welcome. Okay, so we got in euro pound. Let's take a quick look at the pound kiwi. The only reason I want to bring this up is because of the strength that we're seeing in the kiwi and pound, for that matter. Has this thing basically holding the weekly opening range, which is like going to be beautiful. And I love to see weekly opening ranges that hold into a major event risk because the break objectively now becomes also a break of price action that we're watching, right? Aside from the reaction to the data, objectively you have a range to look to clear. So the 236 at 204.46 being the opening range low, let's work with. I know it's just lower beyond that. The opening range high, I'm going to stretch into that 382 retracement, and that takes you into 207.43. To fill the gap, would require a move into this region, 203.23. Now, it's too early to work with this pitch, guys. I know I have it on here, but I kind of just want to see if we do push higher, if we get any type of inflection or play off these median lines, or if we do come to the downside, again, any inflection off those median lines. So don't stress this structure right now, but rather a basic retracement off the high is what I'm working with on the intraday chart. Okay, so it's just a naked chart with the proposed pitchfork. We'll see if that offers any play. And again, a basic retracement is the way you want to play this. Look for an opening range break for the week, and that should give you our near-term directional bias. The better play here is if the sterling or if Brexit materializes. If they vote to leave and pound sells off, with the strength that we're seeing in the Kiwi, should really propagate a massive move lower. And we're already at the bottom end of the range for the year. I want to bring your attention to a basic trendline support that dates back to the lows you made in 2013, tested again in 2015. Here we are again. We dribbled below it and popped back above it. So if we do see a downside break basically of the Sunday gap or the Friday close, you're likely to see a pretty substantiated drop here in pound yen. It's not the base case scenario. Objectively, we'll be looking for a pullback to offer some possible long exposure if they stay on a stay vote. All right. Any questions on pound key? Okay, a quick touch on Euro CAD, a trade that we've been following earlier in the week. This one's a one that we put together in the webinars as well, guys. There's been a lot of questions on it, so I know we spent some time on it yesterday. Just want to highlight that the rally is continuing to sort of materialize as expected. You're looking for that 45.50 level that we talked about yesterday. Confluence resistance all still in line. So none of the levels have changed. Still looks pretty good. I want to stay constructive while above 140, 440 at this point for the Euro CAD near term. By the way, staying constructive, looking for that tag of 45.50, this region right here. This might actually be a decent level to short, especially if the euro turns over on the data today. But initially, primary objective right now, still see a stretch into that 49.50 level, or 45.50 level, excuse me. Any questions on Euro CAD? All right, so we covered Euro, Sterling, Kiwi, CAD, Kiwi Dollar, Sterling, Kiwi, Aussie, and Euro CAD at this point. Right on. All right, guys. I'll leave it open to any questions. If any of you have any questions with regards to today's event risk, specific pairs you want to cover, feel free to post them on the message board now. I'll look real quick at the dollar index as we head into the U.S. session. You know, this thing is looking like it wants to probe a major support. For me, again, it's all about the close. Don't stress intraday price action on a move like this, especially on a huge confluence region like this, until we close the session. Remember, this is a basic median line off the highs, a 1618 extension from the decline off the yearly high, and just a basic two equal legs down from the May high as well, all stacked up in this region. So for me, I'm going to need to see a close below that to really validate the break. You'd be looking for a rally or a rundown rather to the April 2015 low. That's basically 11,634, and that coincides on the lower median line parallel, or the median line rather, for a broader structure later here in the week, early next week. But this is huge. Need to see a close below it if the dollar really is turning over with a little bit more abrupt nature. Again, gun to my head, Mike, what's going to happen? I'd expect to see this hold, maybe even a reversal and a rally before it turns over again. It would just be too simple from here just to drop down to nothingness. But sort of my outlook, my game plan. Joe wants to take a look at Euro Oz. Sure. Joe, here's what Euro Oz looks like first on the daily chart. Nothing's changed on this either. Still that major key support that we're looking at, that we've been talking about at 50.40. Just below that, you have channel support. This is extending, by the way, not off that low, but it's extending off of the June 2nd. Is that June 2nd or June 1st? June 1st low. And that comes in basically with the low we made in overnight trade. Here's what it looks like on the 30-minute. I think this is the more telling one right now. So, Joe, divergence, right, into the lows, into support. You got the March low day close right here at 149.90. You got the lower median line parallel or basic channel support right there as well. Okay, and I like a rebound from here. I do like a rebound from here. Am I willing to take a long ahead of the release? It's tough. It's tough for me. I kind of want to get those initial districts starting to report, just to kind of get the fear and get the wheels spinning on some of these trades. But broadly speaking, yeah, I'm looking for support right around here. And I want to stay constructive near term above 49.40. The yearly open at 49.12 would sort of be the drop in the major key support that, if invalidated, would suggest that you have a major turnover here if we break below this. That's like my last ditch major key support effort. But near term, yeah, I'm looking for support right around this region. So I'm on the lookout for long triggers. And it kind of makes sense, Joe, with what we're looking at with the Aussie dollar, right? So with Aussie basically testing near term resistance here, it kind of bodes well for a pullback in Aussie, gives us a little topside in Euro Aussie on some Aussie weakness. And if the Euro rallies, that's even more that could propagate the trade further. Does that make sense? Joe says, okay, clear. Thanks, Mike. Yeah, you're more than welcome, sir. No change to any of the levels that we discussed yesterday. Adam says, have you covered Euro Yen? No, we haven't, but we sure can. Here's what Euro Yen looks like, buddy. The daily chart and the 30-minute chart, which we were highlighting yesterday. Just a basic channel resistance, the break, and there we go. And there we go. Now, I've been trying to work out, let me stretch this out to just snap the levels for you real quick. Bear with me just a second. Okay. I've been trying to figure out what kind of levels I can map out here for scalps on the way up, a retracement from some sort of concerted high. I keep coming back to the March high, although I'm not really a big fan of it. But if you take the retracement from here, guys, the 236, let me just show you what it looks like. I was looking at this earlier. The 236 came in at such a level that we really didn't get much play at, but even the 38.2 here, we popped right above it, and we're kind of meandering at that region. The only reason I've been sort of favoring this is because the 50 comes in right along those lows. So objectively, even if I'm not using this extension or this retracement, objectively, this is like a primary first area you'd start to look for some resistance on the rally. Another thing is I'm looking for structure. I want to see some structure to the advance as well. Okay, I'm not going to necessarily stress that one, but the channel does look good. This retracement's null and void. Ooh, all right, interesting. Okay, there we go. And bear with me one more sec. I just want to take a quick look at this most recent high, just from the late May high. See if there's any overlap. Whew. Okay. Turns out it's actually pretty clean levels, actually, Joe. Thanks for asking. Or this was Euro Yen. Who was Euro Yen? Adam. Check it out, Adam. Got a couple different interesting levels to look at here. First of all, obviously, I don't even need to point it out. This is huge right here. You got a extension, 100% extension, equal legs off the low, 618 retracement off that high. Again, not a major concerted high. Just 2 weeks prior, 3 weeks prior. Excuse me. We made a a more concerted high that ended up being a multi-week high we haven't tested yet. But in fact, no, let's leave that there. So that puts a region in focus just below 121, 120.95 into 120.85. Again, a decent ATR in this pair. I do like trading euro yen on a scalp basis. A quarter of the daily ATR gives you about 40 pips, so a nice cushion there to give you some room to trade with. But watch for near-term resistance. I'd want to stay constructive above this region still, the level that we highlighted last night. I want to put that right here. So basically above former trendline resistance should now offer support. Current operative channel support coincides on that. And again, the broader median line formation that you're looking at on the daily chart here. We're going to want to stay constructive above this region right here. So if you get a Brexit vote to stay, a pullback into this region would have me looking for long exposure. A rally into this region would have me trying for a near-term scalp maybe for a short, but that would be like a quarter leverage of what I typically do, and that would just be a scalp type of position. But inevitably, if we do get a pullback, that would be the bullish invalidation level, this region right here, basically 118.70, 118.75. Okay, remember on this trade, we gapped higher, we filled the gap, then we broke the gap range to the upside. That's a clearly objective bullish price action. Okay, it's just that the rally has approached now near-term resistance. Adam, does that make sense? For the euro yen? Good pair. Puja, dollar CAD. Adam says, sure does. All right, sir. Puja, dollar CAD, coming right up. Here's what the daily chart looks like. Yeah, more than welcome, Adam. Always good to see you in the webinars, man. So, dollar CAD Puja, interesting price action we're seeing here today. We're testing the low. Oh my God, this trade, right? Oh well, we have some interns here that I've been walking through just basic technical analysis. I'm just telling you some background information, but it's always great to teach younger guys this type of discipline because you can see their eyes light up as the technicals manifest themselves. You can see that interest just spark, and kind of harkens to when I first got started into the market as well. That excitement, that oh wow, this actually works. So we had been, their chore or their homework overnight was to watch this dollar CAD trade. And I had highlighted to them two major key areas of support we'd like to get long. First, the 2016 low day close, and that comes in right at 127.22. The second was 126.90, and that's the monthly low day close, both of which areas of which we're looking for exhaustion lows. And I know we highlighted this also here on SB as well on the 21st. Okay, and here's what the chart looked like. We were looking for entries specifically along exhaustion lows, a stretch low, whatever I called it. I think I called it an exhaustion low. Yep, possible exhaustion low, long triggers into 126.91, 127.22. So in overnight trade, you got that spill, and that's sort of the definition of an exhaustion low near term. Okay, price action reacts extremely strong. You see momentum drop into oversold territory and quickly recover. Even after that recovery, you got a clear-cut trigger break that we're testing, or that we tested and broke above earlier in London trade. And, that's a major key level. I want to stay constructive above 26.90, the low day close for the month. Now, from here, you're basically sitting at former support just above it as support again now that we've broken above it. So this is last week's low at 27.48. I don't want to necessarily stress 70 or 27.55 at this point, but we're basically sitting at it or just above former support turned resistance, now support again. And that level held. So I'm looking constructive above this Puja, while above 26.90. I'd love to see this thing show us a little bit more of a stringent rally off that region. You're already getting some pretty nice kickback. You'd need to clear back above 28.87 to get constructive. And 28.87 is the close from Friday. So just to close the gap, we'd need a rally into this region. And a break above that would be an objective gap range break, right? and it would also necessitate a break of the weekly opening range. So again, on a 30-minute chart, to fill the gap, we would need to clear the weekly open high. And let's take this retracement down to the new low. I want to go ahead and get rid of this 618 at this point. Okay, feel free to take a snapshot of this chart again if you need it for future reference on dollar CAD. Puja. Okay, so if this ends up, and this is just another piece here, if this ends up being a false break and we move lower, do keep in mind that you're basically looking for a tag of the lower parallel. And for today, that could take you as low as like 125.90. So we always want to have our levels mapped out on both sides. I'm looking to personally stay constructive well above 26.90. As a disclaimer, I don't have any trades open on this position. I probably should have. The interns are making money on it today, not me, but in any event, the levels are pretty clear, I think, for dollar CAD. All right. Hey, Pooja, you're more than welcome. Adam says, Michael, what time you plan on getting home tonight? My friend, I couldn't tell you. Couldn't tell you if I'm going home tonight. And even if I do, the work never stops, my friend. As long as markets are on, so am I. Euro CAD we covered, QE Eastern. Okay. All right. Any other questions before I let you guys go? We're way over on time, but I think today's event risk really warrants a little bit more time with you guys. So if you don't have any other questions, or if you do have, feel free to post them now. If not, again, remember, stay nimble. We'll be looking to update you guys as we get through these incoming polls. Don't make any snap judgments on those first incoming districts because they're likely to be a great skew in one way or another. Look for pound, okay? The pound is, there's going to be a lot of talk and a lot of chop, but the long story short is we're going to continue to focus on what the technicals are saying. And I don't care about what any of the headlines say or what they interpret the implications being. Whoops. All we need to know and all we need to keep in mind is the major key resistance that we've tapped into today, 95.50 to 95.75, and the major critical structural resistance if we break higher into 51. What is that? 51.83. Nope. 51.03. Excuse me. 51.28. This key region of resistance near term. All right. Eileen says, thanks for the extra time and warnings. Madad says, thanks, mate. All good. Have a fun day. Adam says, good. Keep up the good work. Also, I love SB Trade Desk. Awesome team. I appreciate that, Adam. Graham, thank you for that. Guys, best of luck trading today. We'll see you on SB Squawk. Cheers.